Hello and a warm welcome to Talking Stocks. I'm Gugulethu Cele. In studio with me is Sean Ashton and Bryan Rudd, both from Anchor Capital. Now today we're talking about the Alibaba Group, a Chinese operator for online and mobile marketplaces in retail and wholesale trade, cloud computing and other services. Alibaba, gentlemen, this is clearly one of those big companies. You think of the CEO as well, Jack Ma, which has certainly set quite a few waves in the tech space of late. But Bryan, just a quick overview as to what the company actually does.
Very much so. I mean, Alibaba is, in essence, a marketplace. So when we think of a marketplace, think of the old eBay. They're bringing vendors together. So there's somebody manufacturing a good, and they're joining it up with somebody who's looking to buy that good. So they act as the middleman across most of their platforms. There's a lot of different platforms within Alibaba, but so they're operating as a marketplace. They don't own any inventory. It's a very capital light structure. They're just putting people in touch with each other.
But clearly this is entering a market which already had other facilitators in it. So is it quite competitive if you look at the landscape now?
It is competitive, but I think winner takes all in this sort of space. That tends to be what happens with the online space, and you've seen it with online classifieds in the case of what Naspers is doing with their businesses. And Alibaba is by far the largest in the world. You know, this is a business that's $166 billion in market cap, and yes, relatively high earnings multiple, but comfortably the largest online. I would call it a retailer, but it's not really a retailer, as Bryan says. It's more a marketplace. So you tend to find that if the website that owns the eyeballs will tend to get bigger and bigger.
It's very much one of those that there's a few smaller competitors in the business, but this is the original and the big daddy in the room. I mean, they really are. They control nearly 350 million active users. So they've got a big base. They are the big daddy.
Exactly. Looking at that though, if you take a look at the metrics which you've already alluded to being the market cap, but looking at the forward PE, looks a bit steep to me, 22 times.
So it's been much higher. I think Chinese growth stocks were certainly in favor for quite some time. And actually, if you look at the share price performance, this business listed at about $68 a share. It went very quickly to $90, went as high as well north of $100, and it's come all the way back to about $65 odd. So I think that space has tended to have fallen out of favor somewhat. We would actually argue that at these levels now, forward 22 represents reasonably compelling value, in the sense that you've still got a business that we think can grow its profits by well north of 20% for quite some time. What's
going to lead that though, that significant double-digit growth?
I think what's ultimately going to lead, there's a macro and there's a micro issue, I guess, in the sense that the Chinese economy is shifting away from GDFI-led, fixed investment-led growth more towards consumption. So you've got a growing middle class that's coming through the ranks, and it's a large number of people. And at the same time within that, so you would expect that retail over time should do well in China, because I think it's certainly government's agenda to drive growth of personal consumption expenditure in China. But on top of that, we think that the shift from kind of bricks and mortar retail more towards online marketplaces is going to be an overlay on top of that trend. So companies that are well placed to be in touch with the consumer via an online presence are best placed to do well, and certainly Alibaba would be forefront of that.
And I take it that's how we see the geographic split, where we see a strong base and foundation when it comes to the Asia Pacific nations because of the mobile penetration there and a broadband infrastructure, right?
Well said. I mean, this is, if we take one step back, it's US listed, it's US reported. This is a Chinese business. The international side of it makes up roughly 9%, but this is a Chinese retail business. So they're on the ground, you've got the man on the street buying. China's a very big online culture. They order everything online. And a lot of that is done via mobile as well. So when we go and look at the volume that they put through huge volumes, and well over 50% of that is done by mobile. So your Chinese consumer there is active, and he's driving this business, and Alibaba's at the front, and everybody wants to be on the Alibaba system.
Precisely, but is there an opportunity, looking at the revenue split chart as well, like you mentioned, a heavy reliance on China, given the fact that it is a Chinese company, are there opportunities for them to explore other markets in the industry?
Yeah. They have started a global push with AliExpress, and that's driving, and it's going slowly. You know, it's if you want to call it the Western world, views some of the things with skepticism. We know China's been plagued by counterfeits and products as such. So the European and the US economies are slowly adopting it. but there is very much this drive from a global expansion. Jack Ma is pushing global expansion quite aggressively, because he has seen that as much as there's more and more of the Chinese consumer coming through and more consumerism, that part of the business has started to stabilize a bit. They were never going to grow at 50% per annum on a constant basis. So that number started to come down. So he's looking to drive the growth a little bit using the offshore business as well.
And looking at the chart when it comes to the gross merchandise volume as well, again coming together with active buyers, clearly when you look at the graphs, it's one that shows significant amount of growth.
It's been significant. I mean, they're selling to 350 million people. That number's more or less doubled over the last 3 years. Now, I wouldn't expect necessarily that pace to be sustained, because ultimately when you're at a level of 350 million users, that's quite a big number of people, even in a population of 1.3 billion. So I think the broader story for China internet retail, if you want to call it that, is one of probably slowing growth in penetration of user numbers, but I would expect that average spend levels would tend to rise over time.
And looking at the earnings growth and EBITDA margin as well, that particular chart?
Very much so. As you can see from the chart, this company is forecast to grow quite aggressively. It's had phenomenal growth going into its listing in September last year. And as much as those numbers are forecast to come down slightly, this company is still growing at 20 to 30% on an annual basis. They've managed to maintain EBITDA margins quite nicely. That's just under 50%. So a good business, good strong, good drivers going through in the earnings, and one we actually quite like.
Just a sidestep for a moment before we take a look at the historical PE and how that moves going forward. Being a Chinese business listed on a US stock exchange, does that actually make sense?
It was one of the structures that was put in place that did raise one or two eyebrows when the company was originally listed, that it's actually a Cayman Island registered business that has a Chinese underbusiness, and they've listed that business in the US. So it's quite a complicated structure around. One of the reasons why they went for the US listing was due to regulatory constraints through Hong Kong. However, with the opening of the channel between Hong Kong and Shanghai and more trade going through in the Chinese stock markets, there is talk of an Alibaba listing in the Asian markets as well. So it was quite a complicated listing, but they also wanted to bring credibility. A lot of the Chinese online businesses listed in the US. It's a regulated market. Financials are regulated. There's a certain level of corporate governance, and they wanted to bring that to the international investor to say, we're not some Chinese business dealing counterfeit products. We are a legit business. There's all our information. There's our financials.
Having said that, I think after seeing the significant sell-off in Chinese stock markets, we're probably happy that they are listed on the NYSE.
I think the other point, I mean, just to reinforce what Bryan is saying as well, is when you're listed on the New York Stock Exchange, you've got to have SEC filings, and there's a disclosure level that's expected and is regulated that you have to put out. So I think we see that as a positive, I would say.
Let's come back to the PE just for a moment again, coming to the metrics of the business and the prospects going forward. 12 times PE, or 22 if I'm not mistaken. Bryan, you can give us clarity on that one?
It's a trailing just shy of 60. Just want to clarify that this is actually a relatively short period. This company's only been listed for the last 12 months or 13 months. So just to put clarification onto that chart. Always traded relatively high, but as Sean rightly points out, there was a lot of expectation and a lot of hype around the Chinese internet stocks. That started to mitigate a little bit, and on a forward basis, we're looking at roughly a 23 multiple. With 20 to 30% growth underlying, I don't think is a bad price multiple to pay.
In comparison to some of the other players though, how does it fare?
So I mean, you've got Tencent that's probably trading at about a forward 30 there. So some they are actually cheaper than some other big internet stocks listed on other exchanges. I think the other point that I wanted to make about Alibaba as well, and Bryan touched on it very early on in the show, is that because they're a marketplace and they don't own inventory, they tend to have a very negative working capital cycle in the sense that they're getting revenues before they're actually dispersing payments to their respective suppliers who place their product on their platforms. So you tend to find, if you look at the last few sets of financials, that their cash flows are actually stronger than earnings, which is not what we see of most industrial companies. So you can almost say that your cash flow profile and your cash flow multiple looks a bit lower than what the actual PE multiple looks, which is obviously a positive. What
about debt? Wouldn't that be a concern as well with a large tech company?
Yeah, I mean, debt, I suppose, is a concern with every business, but with a business generating a 50% EBITDA margin, we think that they can quite comfortably service significant levels of debt.
But as an intermediary, they're actually a very capital light structure. So you're literally setting up systems as opposed to warehouses and distribution centers, etc. So they do have the capital light and structure in their advantage as well.
Time now to find out from our experts whether to buy, hold or sell Alibaba. Bryan, let's get your view on the stock.
It's one I quite like. It's got a great profile coming through it on a forward earnings basis. It's actually reasonably priced. There's no stock that's without risk, so there's a few risks into this business. But one that I quite like, and at these levels I would classify as a buy.
Sean, I take it you
agree?
agree?
It's a buy. I think for much the same reasons. I think a lot of the fluff has come out of the rating. Yeah. There are some concerns around slowdown in growth, but I think that their business is still well positioned to grow well above average. Yeah, it would be a buy for me longer term.
What about some of the risks, though, that might pose a challenge to the buy recommendation? I understand sluggish growth in China, group integration issues.
I think there are some competition issues. So JD.com, for example, is taking some share from them. I think the Chinese consumer is perhaps a concern, but I think the online players probably are placed on the right side of that. And where we saw recent evidence of some slowdown is with Yum Brands, where they recently came out with results which showed that in the third quarter of last year, due to a supplier scandal, they were down 15% on their sales. And in the third quarter of this year, they were only up 2%. So very muted growth off a low base. And they actually alluded to specific macroeconomic conditions in China that they've seen some slowdown, but they also spoke about online aggregators who are assisting mom and pop's pizza suppliers to sell pizzas into the market and deliver pizzas. So that obviously places the likes of a Pizza Hut under pressure, but it probably plays into the hands of the mobile story in China. And I think that the likes of a JD and Alibaba are on the right side of that.
Looking at the leadership, Jack Ma is obviously synonymous with this particular company, given that he is the founder. But your view on management and their direction in which they want to take the company?
Jack Ma started this business 16 years ago, 99. Some friends in an apartment that he had. He's an ex-school teacher, now one of the wealthiest men in the world. He's a very eccentric person, and we've seen that. But he's taken that to a certain extent, and towards the middle of this year, he actually brought in his CFO as the new CEO. Very much a more down-to-earth gentleman, very much on the lines, this is what we do, this is what we don't do. So Jack Ma, as though he's still involved actively in the business, the management and the day-to-day running is now under the control of somebody who's a little bit more on the conservative side, and they're using Jack Ma to rally the troops, stand up in front of everybody, let's go, rah, rah, and underneath going, okay, right, well, let's not waste money, let's not be frivolous. If we're going to make an acquisition or invest in a new venture, that it is actually well researched and not just throwing money away.
Poised for growth. Alibaba is a stock listed just below, what, $70? I see, and it has previously reached highs as high as 120, but like you say, a buy recommendation here in the dips. Well, we'll leave it for this edition of Talking Stocks. A buy recommendation coming through for Alibaba. A big thank you to our gentlemen from Anchor Capital, Sean Ashton and Bryan Rudd. Do catch us again next time where we talk more stocks.
For the latest fundamental and technical analysis delivered right to your inbox, log on to talkingstocks.co.za and sign up for the Talking Stocks newsletter.